All right, let's talk about a stock move that really turned some heads. We're looking at a company called Rezolve AI, and it just had a day that made literally everyone, from the pros on Wall Street to folks just watching the market, stop and ask, whoa, what just happened?
Yeah, you're seeing that right. A jump of nearly 28% in one single day. Now, look, in the world of tech stocks, you expect some big swings, right? But a move of this magnitude, that's not just market noise. That is a massive signal, and we're going to figure out what it's telling us.
And that really is the big question, isn't it? So, what just happened? What on earth causes a company's stock to shoot up that high, that fast? That's what we're here to do today. We are going to dissect this surge piece by piece.
To get to the bottom of it, we have to start with the why. You know, pretty much every huge market move has a catalyst, that one spark that just lights the whole fire. For Resolve AI, that spark was a really, really big announcement. So, on December 16th, 2025, the company dropped some preliminary year-end results that didn't just meet what everyone was hoping for, they absolutely blew past it. We're talking record revenue and, this is the important part, a huge upgrade to a metric that investors watch like a hawk. And that metric is annual recurring revenue, or ARR. For any company in software or AI, ARR is pretty much the holy grail. See, it's not about one-off sales. It's that sticky, predictable income from subscriptions. The analogy on the slide is perfect. Think of it as the company's guaranteed annual salary. And when that salary is going up, it's a super powerful sign of a healthy, growing business. And this timeline, well, it just shows you how explosive that growth really is. Just look at these numbers. The company went from about $70 million in ARR halfway through 2025 to forecasting over $200 million by the end of the year. That is a jaw-dropping 185% increase in just 6 months. And their goal for 2026? A cool $500 million. This is what hypergrowth looks like, and it's exactly the kind of thing that gets investors fired up. Oh, and it wasn't just about the revenue growth either. Resolve also announced that it was expecting to hit positive adjusted EBITDA in December, which was way ahead of schedule. This is another one of those huge milestones that suggests the company isn't just growing fast, it's getting smarter and more efficient as it grows. Okay, let's dive a little deeper here. We've seen the catalyst, the spark, but now let's actually build what we call the bull case. Why did this specific news cause such an enormous reaction? Well, it's really a mix of a super compelling story about the company's fundamentals and some technical signals in the stock chart that were just too powerful to ignore. So the whole bull case really stands on these 4 pillars. We've already hit on the insane ARR growth and the fact that they're getting profitable sooner than expected. But there's more. You've got these strategic partnerships with giants like Microsoft and Google. I mean, that's a massive stamp of approval, and it opens the door to huge customers. And finally, getting added to big stock indexes like the Russell 2000, that means that large investment funds basically have to buy the stock, which creates this nice, steady demand. But here's the bottom line for the bulls, the core idea. Right now, for a company like this, growth is way more important than its current valuation. When a company is expanding this fast, a lot of investors are willing to overlook a high price tag. Hitting all these milestones way ahead of schedule just screams that the momentum is real. Now, let's switch gears and put on our trader hats for a second. That huge 28% jump on way more than average volume, that's signal number 1. It's like a flare that shows a flood of new interest. The next big test is, can the stock price stay above a key level, let's say $2.50? If it does, traders see that as a new floor, a sign of real strength. And when all these signals line up, it creates this powerful momentum, a snowball effect that just pulls in even more buyers. But of course, no story is ever just one-sided, right? For every amazing growth story out there, there are always some serious risks hiding just under the surface. It's so important that we flip the coin over and take a hard look at the other side of this. Time for a reality check. So here are the main red flags you have to consider. First up, the company is carrying a good bit of debt, and that can become a real problem if growth ever slows down. Second, the stock is super volatile, which means its price can just swing wildly based on nothing more than rumors or sentiment. Third, and this is a big one, while that adjusted profit is good news, the company is still losing money by official accounting rules. And finally, you've got some rumors of legal issues floating around, which just creates this cloud of uncertainty.
And this slide is so important because it gets into that nuance. On the left, you've got the good news they announced, positive adjusted EBITDA. Now, adjusted often leaves out things like stock compensation for employees and other expenses. But the reality, on the right, is that under the official accounting rules, what we call GAAP, the company is still posting some pretty big net losses. And you have to understand that difference to get the true picture of the company's financial health.
So let's put it all together now. Let's zoom out and look at the big picture. We've seen the catalyst that started this whole thing. We've gone through the bull case for why the excitement is so high. And we've also looked at the very real risks that could derail it. And this table really sums it up nicely, doesn't it? The catalyst was that huge beat on revenue and their growth forecast. The bull case is all about that powerful momentum, getting big customers on board, and all those positive chart signals. But the risks are just as real. A stressed balance sheet and a stock price that might be driven more by hype than by fundamentals. And that ultimately is the real tension at the heart of the Rezolve AI story. It is a classic Wall Street battle, explosive, incredible growth on one side versus very significant risk on the other. On this particular day, the market voted, and it voted overwhelmingly for growth. But the long-term question is still out there. Which one of these narratives is going to win in the end? The answer to that is going to define this company's future.